Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of Nano Dimension, ticker symbol NNDM. And so here I am recording this on Wednesday, October 16th, after the market has closed and Nano Dimension closed at a price of $2.35, being up about 3% on the day. And so, yeah, I wanted to go over the chart for a number of reasons. One of those reasons being it looks really awesome. I do think that we could be seeing a breakout from this purple downtrend in the near future. So I'm pretty excited about it. But I must say that the main reason why I wanted to go over this video is really just because of a couple people. So earlier today, the Guilty Gunner 007 put this comment on a video that came out about 3 months ago on June 19th, covering Nano Dimension, when I suggested that the bottom might be in. And, he brought up the point that, they might be getting into some printing of defense materials for the military, as they are an Israeli company. There is some conflict over there, and they did just get some government contracts. So there might be some pretty volatile moves to the upside. And I did just want to point out that June 19th was right around here. This is June 20th. So just a few days after, it looks like we tested this orange line at $2.17. And following that, it looks like we got a move of about 50% to the upside, getting to that downtrending purple line there. So I did call the bottom pretty nice there, but I must say we did retrace to that orange line. We actually broke lower than it, hitting a lower low, the lowest low of $2.04, which was the 52-week low, and I believe all-time low, but I might be mistaken there. And so, yeah, I haven't really looked at the chart, but that comment did put it on my radar for today. And then also I got a comment on X from an old friend of the channel. If I do pull that up here, we can see that Mac Attack. If you guys don't follow him, I'd recommend it. He's oftentimes posting about stocks that do take off, just like that emoji suggests. And so he was basically saying the exact same thing that the Guilty Gunner 007 was saying, that, government contracts, higher price targets, and, it could be going a lot higher. And the chart, in my opinion, does suggest that, does support their claims. So I wanted to go over some levels that stand out to me. And so I have mentioned this purple downtrend, and so that actually goes back farthest in time on this chart here, looking at the daily chart. And so we could see that the pivot high that line originates from goes back to February 10th of 2022, and that was a high of $4.16. And then you can see the other pivot point here was around the end of July of 2023. And we have tested that level again here earlier in the year, around March of 2024, before getting rejected and pulling back. So I do think that is a pretty important level. We're not there yet. I do suspect we will see some resistance again when we do get to it, especially because it may be corresponding with this double top over here. If we do get to that level, we might be forming a double top, getting rejected before we get an ultimate breakout. So I think that's a really good level to be paying attention to. But also, I think it's good to be paying attention to levels to the downside. And so the one that goes back furthest in time is this orange level at $2.17. That was the low that was hit on May 12th of 2022. And so you can see from that, we did get a break below it here at the beginning of December of 2022. We hit a low of around $2.06, where I have that red line drawn. So we did get a fake out break below that level before rallying up about 56% then pulling back to this orange line. And that is around the end of June 2023 before going up about 50% there before getting rejected back to that red line. And then getting another big move to the upside, this time going up about 45%. And now we have pulled back. Did test that orange level, bounced a little bit, but then pulled back to that red line, hitting a new low of $2.04, which was hit with a close on the day of August 9th. Just a couple months ago, we hit that low of $2.04 before bouncing, and then we did retest it on September 6th. We hit a low of $2.04 before starting to move higher. And so this other level that I have marked here, this horizontal line, is the recent low from yesterday, Tuesday, October 15th, which was at a price of $2.24.1. And so we see that yellow line there. And so the reason why I have these three horizontal lines is because I personally am trying to get better at having stop losses, planning trades, not wanting to take risk to new lows. And so I initially was thinking that 224 might be a good level for a stop loss, but I could actually see us wicking below that and still respecting this blue uptrending level. So I feel like $2.17 would be a good stop loss level, as if we do go below that, I do think we would be breaking not only below this blue uptrend, but also perhaps breaking below this green downtrend. So, I think that's a good level to be managing risk with, $2.17, but you'll have to let me know your thoughts on that in the comments down below, what level you would pick for a stop loss. And of these, I think that 217 seems like the best bet for picking up more shares at 224 if we do hit it, but then cutting it if we do start to go lower, because then I do think 206 could be on the table, and perhaps, a low lower than 204. But anyways, enough about that. What we can see here is on, let's see, September 25th, we got a move of over 11% on the day when we broke above this green downtrend. And from that, we did retest it here, bouncing from it on October 2nd, wicking below, but closing above before bouncing again, retesting it over here over the past 4 trading days or so, and then getting this nice bounce here, although we do have a pretty big wick to the upside, so that does suggest we could be getting rejected. But we are still closing above that green downtrend. And so if I do take a quick step back, we can see where that line originates from. That is based on the 2 pivot highs, one being from March 4th of 2024, and the other one being from the pivot high of July 3rd. And I must say that this line could be fudged a little bit. You could move it around a little bit. So I'd take it with a grain of salt, but it does look like it was pretty notable resistance over here as well as over here, then getting rejected from it, of course, at that pivot point. But then, we got a pretty clean test of it here, clean rejection on July 30th and 31st, getting some highs on the days up to that downtrend, but not being able to even getting a wick above that downtrend. So I do feel like it is pretty significant, and we have seen some bounces from it. So that is a level that I would like to see us holding. And so with that being said, I do think that we will be respecting 224, but it is quite possible that we get a wick below it. And that could be sweeping any stop losses if people do have them there. I would just look for a close above 224, ideally at 225 or higher. And so that is why I have that yellow line there. And so if we do wick below it, that could be a great dip buying opportunity. And then, of course, with managing risk at 217. And then this blue uptrend, I have that drawn here from the more recent price action based on the low that was hit on September 6th. That was at a price of $2.04.4, as I had mentioned before, and the other pivot point being the low from September 25th, when we had that 11% move on the day, breaking above that green downtrend. So yeah, I mean, I think this looks like a really nice setup. Not only has it been breaking out, moving higher than these levels, we just got a retest of it with a pretty massive move on the day today on the 16th. Although we did get a pretty big pullback with this wick, it does look like we have formed what looks to me like a bull flag. However, we did get rejected from the top of that based on this trend channel here. And so, I could see maybe some more consolidation over the next couple days, but I would look for closes above 224. And if we are getting that, I think that we could be making a move to test this purple downtrend, but perhaps we would be forming a double top, as I had mentioned, based on the high from September 27th. That was at a price of $2.60. So I would look for a move up to there. Maybe we get some consolidation, form a bull flag, bore us out of our positions before we break out from that downtrend. That's a joke. Don't get bored if we do consolidate up here. I think that we could be breaking out. So I would look for 260 to be acting as resistance before we get a pretty big move to the upside. And, like what we saw over here, price targets of $2.75 to $4.50, pretty massive moves to the upside. And so here, just looking at the charts, looking at these prior highs, some levels that I think might be acting as resistance other than 260. If we look at the highs from over here, that is around 275, which does match this target here. And then we also have the highs from over here. Those are going to be around $3 a share. Psychological level, a whole dollar number. We do tend to think in those. So if price does move up that high, that could be a very notable double top there. So I would look for rejection there, but from current price, looking to a move up to $3 a share. That represents about a 28% move, almost 30% move to the upside. So looking really good there, but we could be moving back to this pivot high that this downtrend is based on, and that is around $4.16, which does agree pretty well with the price target here. So, I think that those are all excellent levels to the upside. And I think that these levels here to the downside are great for managing risk. 224 to buy the dip, 217 to cut losses, and 206 to reevaluate to see if it is respecting that level, and if it is, maybe to reaccumulate down there at the lows before we get a massive breakout from this downtrend. And so an intersection between that red line and that purple downtrend, that would be a little over a year from now, around November 4th. So do keep that in mind. We could be trading in this range now, but with the current events, the new contracts, I think that we are primed for a breakout. So look for that rejection at 260, consolidation there, and a move up to $3 and beyond. So that is what I am looking forward to. I hope you are too. But those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot for watching, and thank you so much for the comments, guys. Take care.